Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center in Louisville. Discover no-cost, valuable business services to help you thrive, whether starting your entrepreneurial journey or scaling your existing business. We have the resources and expertise to help you succeed. For more information, please visit our website or text 502-977-5800. Thank you for joining us today. Feel free to use the chat feature to ask questions or engage with our speaker. Let's get started.
Hey, there we go. I have had so much trouble with my camera.
This is the third time in a row I think this has happened. What's going on?
Yeah.
This laptop
Oh my God.
not working for you, Dave.
I know it. I know it. Sorry about that, everybody. This is the last 3 times this has all happened. So, well, welcome. Thanks for joining us tonight. I'm Dave Etcombe, the director here at the Louisville Small Business Development Center. And as always, I'm joined with my good friend and co-worker Jana Flaw, who
It's been a long day.
Try to run the show for us. And so, yeah.
Good evening, everybody.
Glad you guys could take some time out of your evening and stop in and say hello. And so, again, I'm glad you're here. We're part of the Small Business Development Center Network. We're a part of 11 centers all across the state of Kentucky, and it's a national program too. You can find an SBDC in any and every state in the United States. So, we are a no-cost resource for starting and growing your businesses. So make sure that you tap into all the free resources that you can. It's always there. We're always there to help. Personally, in my business career, I've used SBDC a lot, and that's kind of how I got to be here. Was part of that. So check it out. Don't hesitate to reach out. And speaking of reach out, and because everything seems to be technically challenged today, if you wouldn't mind, just so I know you're out there, that you can see and hear me, if you just look at the bottom of your screen, you should see a toolbar. And if you don't, just take your cursor and hover down there. Should kind of pop up there in the chat. If you wouldn't mind just saying, putting your name in there, say hello. Tell us where you're joining from, because that's the one thing I'm always interested in is where's everybody coming from? So just I know there's some folks out there. I see you guys are popping in. So let's see. There's Janet. She's up here. There's Mark. Oh, Judy. Hey, Mark and Judy. How you guys doing? Yeah, I need to reach out to you guys. I've been thinking about y'all lately. So, Hawaii from Louisville. Sarah, Louisville. Just some Louisville folks. I guess Janet's our furthest person away today in Sellersburg. So, but as we go through today, oh, hey, Charlotte. Sandra from Lexington, Amy from Frankfurt. Now we're hitting it. Yeah. As we go through today, if you have any comments, just put them in the chat or the Q&A, and we'll get to them. I'll try to watch as we go along and just kind of stop and answer your questions. We'll have a conversation today. So not a lot of the structure this evening, but this is something that's really important, this idea. I just call it a health check, but really it's sort of reflection, and if you really dig into personal development and psychology like I kind of do, one of the most important tools that you have is a step back period where you reflect on and look at yourself and gauge things. That's how you make real progress as you kind of grow and move your life and your career forward. And same thing in your business is that the problem is that as a business owner, you are so busy with all the things that you have to do and deal with that you just don't have time to step back and look at your business. So you're making decisions on the fly without really thinking through the big picture. And oddly enough, the most successful business owners and entrepreneurs always make time to reflect and do some analysis and really think about what the future is. And Um, so that's kind of what we're going to do today. I'm going to give you a couple little tools, primarily financial, but to use to, kind of gauge your business. I like to do this in December and then sometime between second and third quarters, sometimes maybe May, late April, May, June. So you're doing a continuous pulse. And, when you go to your doctor, same idea. The doctor might listen to your heart and stuff or order some tests and look at things. And then if you go to your doctor regularly, and you should, um, your doctor will line those test results up side by side and they'll see how you're progressing. Same idea here. So let's see if we can't um, get this going here, and we'll take a quick look at this. Here we go. There we go. Man, I'm just having a heck of a time here. So let's take a look at here. So you guys know me now. We just met. So we're going to cover basically three things today, and I'm going to number one, check your entity. Basically, this is to see if your business is still alive. Then we'll look at your financial check. Financials are the basic language of business, so we need to kind of check those things, first. And then lastly, we'll look at some ways to kind of build a monitoring system so you can track progress, make sure you're going in the right direction with your business. So number one, and we call this entity compliance. And it is so important and so easy to let this slip that you really need to check this out because you're responsible for these five things in any business that's registered in the state of Kentucky, unless you're basically a sole proprietorship. But you are required to file an annual report, and if you don't, then your business is automatically dissolved. And you need to keep up with your principal office, so make sure you have a registered agent and the address. And if you're doing business under an umbrella organization and you're operating under assumed names, you'll need to keep those compliant. So let's take a look. It's an easy way to check, and like I said, we see this a lot, but this is the purpose. The provide information to the Secretary of State, so when people need to see where you guys, where you are or who's your registered agent, and that information is readily available. So the principal office address is basically where the business does business. It doesn't really correspond to your registered agent, or it doesn't correspond to all the different partners in the business, maybe, or different members. But somebody has to, even if you're working out of your home, then your home would be your principal address. So as soon as if you ever move or change address, you need to file a change of address form with the Secretary of State's office. And the registered agent, you need to keep this up too, because this is really key. A registered agent is a person or a business entity. There's actually companies that will be a registered agent on your behalf. And they agree to receive process, that's what they call processes, like lawsuits or other notices, on behalf of your company. And they must have a physical address in Kentucky. Can't be a PO box either. So if you're a single member LLC just working on your own, you can be your own registered agent just as long as you have a physical address. Also, sometimes registered agents, if you don't ever really use them, sometimes they like maybe you were using an attorney from a long time ago and you haven't had any contact with him for whatever reason, but he's still listed as your registered agent. Maybe he retires. Well, if the court is sending you something, then that could be a real problem. So it's important to keep up to date and look at this and make sure it's in good shape. Um, On an annual report, you'll need to list all the members and managers of the company or the shareholders. So if there's multiple members, then it'll often be appointed a manager. It just means they're the person who operates the operations on behalf of the other members. But it can be any member in the LLC. So you have to file your annual report every year and it has to file between January 1st and June 30th. It's a $15 filing fee. You can file online. That's the easiest thing to do. And we'll take a look at that in just a second. So if we go past June 30th, then you will get some things in the mail reminding you and probably some email notices if you've signed up for that. But after August 31st, you're shown as inactive on the website. And then I think it's around November, they just dissolve it. And we help people get loans all the time. And often, before I started checking every time, but you get pretty far down the road with a lender, and then the lender looks and says, well, your LLC has been dissolved, and it is jumping through a ton of hoops just to get it reinstated. So that's just so much easier just to keep it up to date. So this is good practice to keep an eye on this. So the reinstatement process, you have to file an annual report for every year you've missed at $15 each. There's a $100 late fee. You have to get a good standing letter from the Kentucky Department of Revenue. If you owe any tax you have to pay up, you have to file any, tax returns that you haven't filed. So it's pretty difficult. So these are the instructions, how to get this all done. Go into that. Again, this is, you're not recognized as an operating business. You have no access to capital or grants or government contracts. You might be personally liable for debts or damages incurred by the LLC. So it's important to keep your things up to date. So we're not going to, let's get that. So all you got to do is go to the Secretary of State's website. It's sos.ky.gov. You can see it up there at the top. And just click on the little briefcase there where it says business. And, it'll pop up this little menu here. Hit business entity search and type in your business entity right there in the box, and then click search. So we're going to put in Emily's Dog Walking Services. And then the list of all the Emily's businesses will pop up. The ones that are pink, they are inactive or dissolved. The ones that are green are active and good. So hopefully that's you. So just search for your name and it should come up, and that's all you got to do. If you look up at the top there, when you find your LLC, click on that, then your page pops up. And if you look up, we're up at the top here under the around the little menu bars up there, menu options. Within the red rectangle there, you'll see where it says File Annual Report, and just click on that, and then type in your name again, and then it files right up. So easy as that. So it's best to kind of keep track of that. So check that, and it's important to do that because actually the annual reports are due now. Get close to June 30th. So you haven't already done so, you should do that now. And if you find out that you've been dissolved, now's a good time to get to work on that before you have another year behind you. So check that out. So the next thing we're going to do is look into your financial health and take the pulse of your business. And it's, you know, important to do that because this is a super tool in your toolbox. And the whole process um, is really key. And it can be time consuming, especially if your financials are not up to date, or maybe even you're just a very small, one person shop and you kind of know in your head how things are going, or you think you do. But it's important to be able to look at the numbers objectively. So it has to be on, in some sort of form on paper or something. But if you have a decent number of transactions, you really should be engaging with a bookkeeper to kind of give you these reports so that you can see and get that information without spending a lot of time on your behalf to do it on your own. So, um, without these numbers, you're just kind of flying blind. You're just, you know, making decisions by the seat of your pants. Um, the funny thing that we hear a lot, or I hear a lot anyway, is when people are struggling, with cash flow and things in their business, I always hear, well, if we just had more sales, then we'd be doing great. But more often than not, when you really dig into it, more often increasing the sales won't do any good because the way your structure is, the more you sell, you still lose even more money. So it's important to understand your financial information and tweak that business model so for every dollar you sell, you actually make money on that. So once once you have your business model in place, um, you know that the more you spend on advertising, the more money you're going to make because your business model works. So it's the starting point to grow your business actually. So step one, you have to have accurate financial data, and you know when you're really busy and got all this stuff going on with your business and dealing with your customers and maybe employees or contractors, it is the last thing you want to do is sit down and reconcile your bank accounts or enter all your transactions. There are a ton of tools today that you can use to automate a lot of that stuff. It's easy to find a bookkeeper that's fractional that will do your books for you. They don't have to show up anymore. They just log into your software and work with you that way. So, the key is to get things set up correctly at first. Work with your bookkeeper to do that. But this is how you start to make good financial decisions for your business. So print out all your reports, review everything, just get a good sense of what's going on. Um, you could customize your profit and loss layouts. If we have time, we'll talk about that. That's a fun subject to talk about. And I kind of included it, but I didn't know if we'd have enough time for that or not. So the first thing we do want to do is analyze our financial statements. And there's a bunch of easy ways to do this. The first and the best, and one of my favorites, is called horizontal analysis. And it is just that. Um, so if we get a financial statement like this one here, it shows that we've had some sales, we've done some, um, we've done, paid some expenses and things. But, really, these are all numbers and basically they're quantities. They don't really tell us the quality of the numbers. And this is what we're looking for. We're wanting to understand what these numbers are telling us. We don't know if, you know, our cost of goods sold, $300,000, if that's good or bad. We need more information. So what we will do is, like, if you get some history and line up side by side, um, This is called horizontal analysis. It's just looking across. This gives us the quality of the numbers, not just the quantity itself. It tells us some things. So it's just that easy. Everyone can compare. In fact, I had a cat one time that could compare, but that's another story. So we can see that if we just look, you know, that oops, um, our sales are going up, you know, from 450 to 600. Um, you know, expenses are going up a bit. Profit went up from 50,000 to 55,000. So these are all trends that we can look at. We just look straight across, see how it's trending. That the act of doing this kind of gives us things to, you know, to look at. Uh, we don't want to analyze, and we don't have time to analyze everything, but what we want to do is look for outliers. We want to look for things that are trending in kind of the wrong direction. And what I would do is I would just print this out on paper, and then I'd have a highlighter, and then I would go down, you know, and line by line, like if the expense goes up, then I would highlight that because that means that that's something I need to look into. Um, if the expense goes down, well, then I don't really need to look into that because that's a positive movement for me. But we can add more to this to make it even easier to do. So this is what's called common size statements analysis. And so what we would do is we would take this, and let me back up. To get a trend analysis like this, it's if you're using QuickBooks, and most people do, I think, it's just a matter of clicking a box on your report menu to make it do this. So what I would want to do is, you know, if this is my first year, even and I don't have years to compare, I would compare months. I would do, you know, a trailing 12-month analysis, you know, just so I can watch the months as they roll by. So we have these, have our three analysis or financial statements. Next, if I'll click this other box, and then I'll have QuickBooks export a percentage of sales columns for each one. So this is one of the best things to do is always have in all your financial statements have a percentage of sales. So at the very top, your sales are 100%. And then everything else below that is in a relation to that 100%. So if we look at this, we can see that in 2020, sales were 100%. Our cost of goods sold was 225 or 50%, and our gross profit was 50%. So if I think of my percentages, if I think of the 100%, this is the easy way I think of it. The 100%, the total sales, the 100% is $1. I know that for every dollar I sell, it's going to cost me 50 cents, and I get to keep 50 cents to pay everything else. So it's just an easy way for me to think about it that way. So in our example here, we, you know, our sales went up from 450 to 600, still it's 100%. And our relationship stayed the same. Our cost of goods sold stayed, as a percentage stayed the same. So that's a good check right there. So 50%. Owner's compensation is something that's looking at. So we can see that there's might be an issue here. So in 2020, owner was putting 15,000 in his pocket. It decreased to 14, and even further to 13,000, which is 2%. So you can see that from a revenue standpoint, not much has changed. The relationship is the same, but the owner's compensation is dropping for some reason. That's a red flag, especially if I'm the owner, right? And it looks like our total payroll has gone up from 95 to 110,000, which sounds like a big increase, but if we're looking at the percentages, it actually decreased as a relation to our sales. So that's actually, even though dollars went up, it's actually a good thing. We can also see here that in 2020, we only paid 13.5 for our rent and which was 3% of sales. And now we're up to 44 and 46, which is 8%. So that's a red flag. There may have been a reason for that, but that's something to look at if you're looking at it from outside. And so we can also see that our expenses went up, and the percentage, the relationship to sales have gone up 3% as well. So our net profit, as a result, a percentage, we've dropped from 11% to 9%, which isn't a huge drop, but that gives us some opportunities to look at some things. So, what are some things you could do here to make those changes? Maybe it's time to increase the prices a little bit. Maybe it's time to find a different supplier and see if you can drop the cost of goods sold. Maybe you can call the landlord and see if you can get some rent concessions. Those are all things that if you're busy doing things you don't think about doing because you didn't analyze these numbers like this. We can also just take the numbers, the dollar amounts away, and just look at the percentages to compare, which is a great way to do it as well. So again, it just quickly you can see where there are some opportunities to really, dig in and figure out what's going on there. Often when you're looking at expenses, you don't really know whether, even though they're trending in a good or bad way, whether that's actually good, whether you're getting a good deal or things are set up for a good way. And one way to do that is pull an industry benchmark. And you can get this information from the Louisville Free Public Library in their business section. If you get an online library card, you can just access their database online. And these industry benchmarks, the companies will, the Risk Management Association, they collect tax returns from industries all over the country, and then they average them out. They split them up kind of by size, so that you're kind of comparing, size to size, and then and they turn those into these common size statements, so that what you're really looking at is the way the business model is set up, not how much the dollars are. So in this business, my 100% of revenue might be 1 million, and a comparable average in industry, it might be 5 million, but the relationship from sales to expenses should be close to the same. The dollars will be different. So what this is telling us is that we can see that, in the benchmark study, 100% of sales, their cost of goods sold percentage is 46%. So they are a full 4% down, below, which means that for every dollar they sell, they get to keep 54 cents, whereas I only got to keep 50. Now, again, they may be able to get better volume discounts, so their materials are cheaper, or maybe they're a little bit maybe the prices are higher. But those are things to look at. The most important thing, though, is in this industry, a business owner, on average, will make 7% of revenue and put that in their pocket. I'm in this business, making 3 or 2%, which is not good, which tells me that if I can figure out how things work or what those relationships are and make those good changes, then I can conceivably put some more money in my pocket. So some other things to look at, you can see that benchmark-wise, the manager salaries are a little bit lower. I'm paying a little bit more. Other wages are about the same. But by and large, I'm down a point on my payroll. Our operating expenses, sometimes the expenses don't match up with the way I have my things laid out, but But overall, the overall operating expense, you can see that on average, their expenses are lower, 36%, and mine are averaging around 40%. So there's an opportunity there to dig in there. After expenses, their operating income, basically their gross profit or profit before tax and other things, is 18%, to make a full 8% more than I do. So that tells me there's some things I can look at to really, make a difference though. And another fun thing to do is ratio analysis. And when you're a smaller company, a lot of the stuff, the traditional ratios, just don't tell you much. Your financial statements aren't or your assets aren't built for this type of analysis, but it's good to know it because kind of helps you do some other things. But we'll talk about that in just a second. So ratios are basically a comparison between numbers. And there are an infinite number of ratios. Like I said, there's some set ones that accountants and stuff will use, and the information from the database that you pull from the library will have some ratios as well. But these are the 4 primary financial ratios that most CPAs and accountants kind of dig into. And number 1 is your liquidity ratios. This measures your company's ability to pay short-term expenses. Activity ratios are the way the company uses what you have, your assets, to generate revenue and profit. It's kind of an efficiency measure. Your leverage ratios kind of talk about the amount of debt you have and your ability to pay your debt obligations. And then your profitability ratios just measures the amount of profit that and your return on investment that your assets are developing. So here's a business report card with which we'll send you later, but it has the formulas there. And so using the information of our sheets up there, we could use working capital. We can do that formula. So we would go to our balance sheet and subtract our current assets minus our current liabilities. We didn't look at a balance sheet today, but tells us that our current ratio is, some of these things you had to have a balance sheet. That's why it's not really super important, appropriate for smaller businesses, because a lot of times when you're in a small business, the balance sheet is just not that important. But your profitability ratios, absolutely. And we looked at actually what we were talking about. Some, your gross profit margin, we were looking at that on the income statement when we put these percentages in. So we can also do the same thing that we did with, like I said, with the benchmark data from the library. They'll have some that you can use, line up to with yours and see how you compare. So there's industry, financial data. You can also make up your own ratios, and this is this has been super helpful for me over the years, but let's back up a little bit here. So in these activity ratios, this inventory turns and inventory turnover, if you have inventory, those are great. But again, it means you have to kind of dig into your business a little bit and actually do a physical inventory if you have products and stuff. But to measuring that, used to be in the restaurant business, and we would do inventory once a week, and basically using these inventories and the number of turns. Basically, an inventory turn is like a theoretical. If you sell all your inventory down to 0, and then had to restock all at once. I mean, that never happens, but that's how it calculates it. So the more you reduce the number of days that your inventory is sitting on a shelf, the more cash is freed up to come back into the system that you can purchase. So, you can have too little inventory that makes your customers angry. You can have too much that affects your cash flow. And the idea of watching these and measuring these inventory days turns is you want to be able to squeeze that down to right above where your customers will notice, and that way that you have extra cash freed up to pay other bills and stuff. I used to be able to pretty much predict to the day when I would need to have a truck come in with a reorder before anybody noticed. You can also, there's a bunch of industry specific ratios that people will use, or you can make up your own. A good example is back to the restaurant business is check average. Check average is a ratio of the number of people that come in a given day and the total amount that they sell. So you would basically, to calculate that, you just take your total sales for the day and divide it by the number of people that came in, customers, and that tells you on average what they spent. Some people will spend more, some people less, but on average, they spend less. So if I have a fast food business, let's say, back keeping it with the restaurant theme, and my check average is $12, and I want to try to get my staff to upsell. I can keep an eye on that, and I can tell if they're doing it or not, or if it's working just by doing my daily check average. So if I want to do like an upsell that it might add a couple dollars to that check average, at the end of the day, I should be able to check and know whether my customers, my employees were actually doing the upsell or not. Or if I try a different marketing strategy and where I'm trying to move customers to higher priced items, and that number doesn't change, well, then I know pretty quickly that whatever I was doing was not a good strategy. So um, when you go to the doctor here, oops, and oops. There we go. Let's see here. Let me check the chat here. Okay, cool. So, once we take the pulse and we kind of have looked at some things and identify some things, just as your doctor would do, you've got the information. Now you need to track it to make sure that what you're doing is having a positive effect. And the way to do this is to build a financial dashboard. This is probably one of the more important things that any business should have, is some sort of dashboard to honestly just track whatever you want to put on. You can, I just make them up myself, what I want to track, because in business, in small business especially, you can't wait for your bookkeeper to give you your financials maybe middle of the next month. It just you just can't. So let's talk about that. Let's pause for just a second and talk about the basic philosophy of what we're doing about this, what we've used, what we're going to use, or what we learned, and what we're going to do going forward. So there's kind of 4 keys to the success of your business health, because it's part of this whole larger process. And as I said in the beginning, the reflection part of it is super important. Where you step back and take a look at your business in a bunch of different ways. From what we learned looking at those numbers, you would have some priorities. I need to understand why I can't get paid more. I need to understand why the expenses are so much lower in my benchmark study. What are those priorities? What are those things we need to do? What are those strategies? And once we identify those, we need to gather the data so that we can watch for the trends. And we need to do that on a regular basis. Every business and every organization has like a rhythm of how they do things. And I think it's, like I said, you in a small business, you can't wait for your bookkeeper to give you financials. You need to, get them sooner. So I think the rhythm of a small business is in a week. Um, so once that is over, you're basically doing the whole thing again, you know. And one of my businesses, this whole process was a weekly process. You know, we would meet early on Monday morning. Sometimes we'd switch it up and do a Friday morning, but you know, we would look at our numbers, look at things, come up with our priorities. We would watch our trend data, and then the next week we would do it all over again because we could adjust, we could pivot very quickly by doing this process. So step back at the big picture, look at your financial statements. Um, you can also do customer surveys or employee surveys, all these different things when you do the big one. Gosh, I did all that, dang it. So, the whole rhythm is more than weekly sometimes, or is, but, weekly is where a small business lives. And you would do like your monthly financial statement review. And then there's been a lot of stuff too where, when you're doing your weekly reset, your priorities, um, that's a quick checkup, but it's also important to do quarterly step backs and quarterly goals. Um, I've personally found that the idea of an annual goal is okay, but if you think about yourself and other organizations you've been in, when you have annual goals, especially annual employee goals, nothing really happens till like the fourth quarter. Then suddenly the goals start to hit, because everybody thinks, well, I've just got more time and I'll get around to it. But if you can squeeze your annual goals into a quarterly goal, um, then use your weekly resets to get to that quarterly goal and then come up with another goal at the quarter. So the quarterly resets are great. But then lastly, we need to data. We have to calculate the data. We want to put facts on a page. We want to put some numbers down. It's really key, and I found that it's really important that you do that yourself. I'm going to show you some little apps that can do it for you, but I don't recommend that. I recommend that each person on your team or pull their own numbers and submit it up, put them in a spreadsheet. Honestly, the act of doing that does way better than just looking at the numbers. It really is thought-provoking. So I'm going to just show you some things that I kind of popped up. This is a dashboard that I use a lot that just kind of came up. So on the left side, just different things that we want to track on a weekly basis. Team labor, some other things. Down at the bottom, what else we got? Total sales. Just what are the things that again, you make this up on your own. On the right is basically, an informal balance sheet. So I want to know what my cash position is. Um, so that's the number one thing at the top. Then less, current liabilities, things we have to pay, and then what my ending cash will be, what my inventory is, what's coming in and out, my receivables and my payables. It's really important to age them out so like your customers, if you're selling on credit, people are paying on time. And then at the very bottom, I added this in because I don't know, this is what I like, I guess, but is just liquidity. I just take the numbers from above, add them all up and subtract all the debt out, and then the net liquidity. That's the that's the amount of cash that's left over, in essence, that if I decided to lock the door and throw away the key today, paid all the bills, paid all the employees, and walked off, then that's the amount of money that I would have in my pocket. And as long as I was positive and going larger, then, I was happy. Here's another one that's from another restaurant business, but, we came up with some percentage goals, and We did our inventory, and we kind of track this on a weekly basis. Um, this is another one that's kind of a generic, where you make up your own. This is one of the red, yellow, and green sort of things that you can put in there. This one's pretty good. Um, QuickBooks does dashboards for you automatically. I was, just kind of click that up. Again, I think it's really important to pull the numbers yourself and put them in a spreadsheet on your own. That's again, that's where you kind of get all the insight. I don't know if anybody uses Zero. I kind of like Zero. It's a decent little system. Um, so this is their dashboard. Mind your own business. I know more and more people that have started to use this, but this is their format for their dashboard. But again, the reason these are okay, but again, they're not super customizable. Again, I don't know. I tend to make things up on my own that tell me things that I want to know and helps me make decisions. These are some other reporting apps that you can use to kind of pull other data out and make some kind of changes and come up with your own dashboard. I'm proud to use these. Honestly, I'm just showing you. There's new ones coming all the time. If you're interested, you can play with those. But again, I've tried it. Wasn't super happy with it. So here's some of their output. Here's Fathom. Spotlight. I actually kind of like Spotlight. They had some good features that I was interested in. Um, so there we go. Let's see. Yeah. Um, that's kind of it at the moment. I hope that was kind of helpful. I know this financial stuff can be kind of dry a little bit, but if I was going to give you a couple quick takeaways, I would just say to make sure that you look at your numbers, your financial information on a regular basis. Try to set up um, that whole rhythm on a weekly basis, and then the quarterly, monthly resets. But I can't tell you how helpful that has been to me, and I think it will be to you. So, you guys have any questions or comments? But I haven't really been watching the chat. But I don't see anything in here. Yeah, couldn't have been that clear. And I can see you out there. So, um, anyway, you know, let's see. Okay, hey Amy, how are you? Amy, 3 years in, have a bookkeeper, but don't look much at it yet. This is overwhelming. How do you recommend we start when you're small? Yeah. Um, I think I would, yeah. Honestly, Amy, I know it's overwhelming, so I would start kind of small, and I would do exactly as I said in the beginning. I would take a day, and maybe if you have some staff, um, gather them in the room and kind of go over some stuff. But I think the number one thing is if you can get some insight into the way your business model works, and look for some of those things we talked about, some of the some of the outliers, and then make those a priority, and then have your team, or a group of advisors or friends, or you can call me up. I'd be happy to help you too. Just come up with some priorities, and then figure out what are those levers that will affect that number, and then build a little dashboard that you can just um, start tracking, because what gets measured gets managed, and it always seems to improve once you start really looking at things. You instinctively start to do things. Another little trick I used to do with my staff is that I would, build these little dashboards and I would just hang them up around. I wouldn't say anything about it, but then, people started looking at them and we as humans were sort of competitive. So, you see these numbers and people get involved and it's kind of cool. So, yeah, um, just reach out, Amy, and be happy we can do some brainstorming and come up with something and figure out how to do that. Sandra, yes, we'll send you the presentation. Judy, how are you? Judy says, a lot of good information. Look forward to playing around with how numbers can show a deeper understanding. Thank you. Yeah, absolutely. As always, it's informative and helpful. Thank you, because we're just starting out. No questions. Cool. Amy, if you could pick 3 to 5 data points to look at, what would they be? Okay. Number one would be either my cost of goods sold or my gross margin percentage. Those are super key. Everything kind of flows out from there. Next, I might just veer away from the financials completely and start thinking about some different things like, what can I do? Back to the check average idea, what can I do to get my existing customers to buy more from me, and figure out what sort of metrics I can measure that way. Maybe that way. I don't know. But again, it is, just just pick a couple things. And it doesn't have to come from your financials, like I said. I don't know, I'm drawing a blank, but yeah, reach out and I'd be happy to help you guys or anybody. We'll just kind of brainstorm some ideas and see if we can't come up with something. Put together a little dashboard on a spreadsheet and build it out for you so you can manage it. But I guarantee, once you start measuring this stuff and playing around with it, I mean, you'll get hooked like me, and it really makes a big difference in your business. So please do that. All right. Well, I can't thank you guys enough for, working all day and then spending another hour with me. I do appreciate that. I always can't believe there's people on the other side of the screen. So thank you so much for coming, and I hope we answered your, what's the phone number? I'll tell you what, the best way, I'm gonna give you guys my calendar link. There we go. So if you go to that link there, it hooks right into my calendar, and you can see when I'm available and just book in a time. We'll do a Zoom call. That's so much easier for me. I can't keep track of my schedule. I mean, I'm just not that smart. So, if you call me and say, "Hey, let's meet on Tuesday," I'll forget. So, but if you put it on the calendar, I will be there every time. So do that. Be happy to see you guys. All right. Well, I hope you guys have a great evening. Thanks for joining us on another Tuesday, another Toolkit Tuesday. And Janet, thanks for joining me as well and driving the ship. And we'll hope you have a good evening.
Thank you, Dave. Everybody stick around for a second and we'll do a quick evaluation.
That's right. Give me good marks, okay? Please. All right. Thanks, everybody. Have a good evening, and I'll see you next time.